Hello. Hello and welcome back. Hope you're good, doing well, and hope that you see my screen and sound is good on your end. All right, so let's move on. Let's look at the setups for upcoming week. So we are having a big week. So Fed rate decision is going to be there in the next week. So first of all, if anyone want to join, looking for you know for setups or for training, just simply go to wave-trader.com and check membership levels there. All right, and if you're looking for further information, you can fill form for that. Okay, so check membership levels, and if looking for further information, just fill that form and send that form to me for further information. Okay, I'll try my best to get back to you as soon as possible. All right, so let's move on for the setups for upcoming week. So we are having Fed rate decision next week on let's look at the date, on Tuesday. All right, so and on Wednesday, sorry, Tuesday gonna be the Bank of England rate decision. So yeah, Wednesday. So Thursday gonna be the Bank of England rate decision, and it is widely being expected that Bank of England gonna raise the interest rate too. So Fed is also going to raise the interest rate too on this Wednesday meeting. So Fed interest rate hike is already priced in heavily in the market. We can see that dollar is extremely bullish or strong ahead of that. All right, and equities are dropping ahead of that risk event. Also, we are having war in the Ukraine that's causing the equities to drop too. All right, so this is a major event. So Fed hike is already priced in. All right, so the most important thing from that event going to be the balance sheet. All right, so how Fed is going to deal with the balance sheet. So everyone knows that Fed is going to raise the interest rate on this meeting, and because of that they were buying the dollar or pricing in the risk on assets because of that. Okay, so the big question going to be the balance sheet, how Fed is going to deal with the balance sheet. All right, so that can drive the market. Okay, so now let's move on to the setups for the next week. So dollar index, nothing major. Okay, so dollar is simply pricing in for the bullish move. It is about to test the previous top, the top which we are talking about. Okay, this previous top 100. All right, we can say that the 100 mark is about to being tested by the dollar index. All right, and last week, as you guys remember, that last week we were expecting it to correct. All right, at least up to 50% retracement of this previous move. Okay, this up to this area, so it retraced, but it didn't retrace up to 50%. We have only seen more than 23% tracement, and then price just broke out for the next leg higher. Okay, so next week we may see another leg lower before going to continue back to this previous low for short term. This is going to be a buy opportunity for more upside for another leg. Breakout is possible, price can continue, but this is not a best opportunity you should look for. Okay, so you should wait for the price to pull back and it to hold this previous low and continue to keep pushing more higher for another leg higher. Okay, another or the triangle which you see over there. All right, so triangle which I'm showing over there, so price to just form that triangle and continue to keep pushing more higher. So if I'm gonna pull out the euro dollar gonna be the opposite side. Okay, so euro dollar is also crashing. We know that why it is crashing. Okay, because of the Ukraine war. It's just dropping and about to test this previous low. So last week what we were expecting it to pull back up to 50% retracement of the previous move. Okay, so previous wave, this previous wave. All right, so price has retraced. Let's just use this. All right. So price has retraced here almost 50%. Okay, so last week we were expecting it to retrace up to 50% of this previous wave. Okay, so it has retraced not exactly up to 50%, less than 50% or more than 61%, and 55 we can say that. Right, so 55% tracement has happened over there on the euro dollar, and then price went lower. So the next leg is still bearish. Euro dollar to just continue to keep dragging lower all the way up to this previous low for the next week. All right, and in best case scenario, break down that 106 area for more downside. All right, but you shouldn't chase the euro dollar at this area. Okay, you shouldn't be a seller over there. So you should wait for the price to pull back for another leg higher, back to this top for short term. All right, short term, one more up leg, and then you should chase into that direction for the next leg lower. All right, or flat formation like the XY. Volatility is extreme over there in the market, specifically in the European assets. Okay, so keep dragging lower, hold that bottom, and then go back up, and then continue to keep dragging more lower. So this is a bit risky trade, buying against the trend. So if you are going for buying the euro, specifically on the Fed rate, the CN Fed hiking, the CN we are having next week, so it's going to be really, risky to trade for buy. Okay, so if I'm gonna make it more simple for you, you are simply looking for price to pull back for another time within these moving averages. Okay, at least back to this top or test that red SMA, and then continue to keep dragging more lower. So move is already happening. The move which I was talking about in the previous weekly market outlook. All right, so 50% retracement that has happened, and price just simply went lower after having that, trying to break down. So there is possibility for another leg higher before going to continue to keep dragging more lower next week before the Fed rate decision, like the way I'm showing here. Okay, like that flag ABC move. So better to wait for this small move to happen and price to continue to keep dragging lower, specifically during the Fed rate decision. All right, and we are having down, so you don't have a perfect opportunity on the pound dollar. So if you see my screen on YouTube, then let me know. Hopefully everything is fine on the YouTube, guys. I just got notification that the stream is stopped. So if you see my screen on YouTube, then just type a yes over there, and then we're gonna go ahead. All right, so seems everything is all right. Everything is just fine. Okay, so let's move on. So pound dollar is already dropping lower, so we are expecting this to just continue to keep dragging more lower, at least up to these areas. Okay, not a best setup, not a best pair to trade anytime soon. We may see bigger correction, bigger daily correction soon on the pound dollar. So we may see that. Thank you very much, guys. So we may see bigger correction next week during the Bank of England rate decision on pound pairs. Okay, so because it is widely expected that they're gonna raise the interest rate, there we can see. So when you are looking to short the pound, all right, then make sure you understand that it's a bit risky to short the pound, because pound has already made its move very, very aggressively, similar like the euro dollar. All right, and the wave which we were looking on the pound, if you remember that, we are about to complete that wave, and there's going to be a daily correction very soon on the pound dollar. All right, so we have just completed that wave. So we broke through last week. We were expecting it to break through, if you remember, break through that previous low and continue to keep dragging more lower. This area, it broke out, went lower. Okay, now the daily correction is just due on it. All right, so daily correction is daily. What let's talk about that first. So what kind of daily correction gonna be? Yeah, so I'm not anticipating pound dollar to go that much far away anytime soon. Okay, don't see that the pound gonna go that much far away. So we may see a pullback on a daily time frame back within the moving averages for more downside. Okay, so something like that. That's not ready yet. Okay, something like that. 50% retracement of this move, very much similar like the euro dollar. Okay, and then again continuation for more downside, which can break down this previous low for more downside. All right, so something like that, that kind of daily correction we may see in next couple of weeks to month. All right, so right now pound is already extremely bearish, pushing more lower. If you are looking to trade on it, trade with care for either direction. Buy setup is not ready. Okay, even short has happened. Okay, if you are trading on such pair at the current levels, okay, they are either you're gonna buy it too early or and gonna go against the bearish trend, all right, or you're gonna sell it at the bottom. Okay, so for short term, you still can stick to the previous short-term bearish trend, okay, and the small continuation trade. I don't see a potential, big opportunity over there on the pound anytime soon till we're gonna have a bigger daily correction formation, okay, which is due. So if you see that another pullback like is going to happen, okay, there's gonna be a small move to the downside for more downside up to 20 October lows. If you remember that, we were targeting that 20 October lows. And I have mentioned that, a couple of times ago as well in my weekly market outlook. All right. So previous weekly market outlooks as well. So we are heading towards that 20 October lows. All right. And potential is just limiting over there for more downside. Hope that makes sense, guys. And be prepared for a daily correction that we have just shown you over there. All right. So that's the pound dollar. Okay. So dollar CAD. So dollar CAD, I have explained to you last week that buying dollar against the CAD carry a higher risk because of the higher oil prices. Oil market is extremely uncertain right now. All right, so extremely uncertain. Extremely uncertain means that it is reacting to any news which is just coming over there from Russian side or the news is coming from the West side. All right, it's just reacting to that. So the worst scenario is that if either party is going to stop taking Russian oil or gas, let's say if Europe is going to stop, it is going to be very, very extreme situation for them if they stopped. All right, so gas prices can skyrocket. They are already skyrocketing in the Europe, but we can see more, extreme scenario in the Europe on the gas prices and on the oil. So over the weekend, Russians were also saying that they may stop the energy supply to the Europe. Okay, both parties are at extreme levels. Anything can happen. All right, both parties are trying to put pressure on one and each other. So the extreme scenario is going to be either party is going to stop. Let's say if Europe is going to put sanction on the Russians for taking their gas, that's going to be extreme scenario for the oil and gas prices. Okay, so they can skyrocket it. They can push more higher. Oil can go more higher. So CAD can react to that. So keep that thing in mind. Right now, why we are not seeing strength on the CAD while oil went beyond 130 up to up to 147 last week. All right, the reason is very much simple, because we are having higher inflation in the US. And Fed is going after that inflation, okay, higher than the other countries. That's causing the dollar to stay strong, because market is expecting that Fed gonna raise the interest rate and gonna tighten very, very quickly than the other central banks. That's the reason CAD is not getting very, very strong against the dollar the way it should do, while having stronger oil prices. So keep that thing in mind, okay. So what you are looking for next week, just simply another leg higher on the dollar CAD to tag this previous low and one more up leg back to this previous top, or break that previous top for more upside. So in case if oil is going to crash, then dollar CAD to rise very, very aggressively for more upside, because dollar is still behind against the CAD. All right. So that's the dollar CAD. And if I'm going to look at the New Zealand dollar, US dollar, so New Zealand dollar, US dollar to fall too. All right. So the pre-pandemic price going to be somewhere there close to these areas. All right, so somewhere there, yeah, within these areas. So let's check quickly on the dollar index. So the date which we are having is 17th of February, okay, and the The date you are looking price to tag is the 17th of February, which comes there. Okay, so New Zealand dollar still got a room to run for more downside for another leg lower. It has already tagged that 20 October lows, if you remember that, which we were looking at these areas, okay, within these areas. So it has already tagged that. Another leg lower is possible on the New Zealand dollar, US dollar for next week, specifically during the Fed rate decision. So what you are looking, last week we were expecting it to drop aggressively. Yeah, we had that correction. It was just keep, pushing higher within that channel and then finally drop very, very aggressively the way we were anticipating it to do within these areas. So slightly went higher. Okay, within these areas, then boom, dropped. So what you are looking, so the move is very much similar like the last week, another bearish leg, okay, back to this previous low or 17th of Feb. Okay, these areas. Okay, so 63 mark, all right, so, or this previous low, 18th February or 17th February. So 63 gonna be the price target. So if I'm gonna look at the lower time frame, so price is forming a flat formation, all right, so it's forming a flat formation. So you are looking at another short-term one more leg and price to test that previous top and then start the bearish leg from within these areas and do not stop and keep falling very, very sharply. The way my arrow is showing similarly, okay, so fall very, very aggressively and just keep crashing. So if I'm gonna look at the lower time frame, okay, so price may not test that top, okay. If it is not going to test that top, you shouldn't chase it from the current price for short, okay. Then let this to drag more lower. So hopefully sound is all right, Stephen. So if someone having issue, I can see that sound is all right on my end. Okay, so if it breaks down, okay, so don't chase that on. So let this to pull back. There's gonna be a pullback if it breaks. I'm not anticipating this breakout right now, all right. So if it breaks down, let that go, and there's gonna be a correction. Okay, that correction can be a 1 to 4 hour time frame, and then you're gonna look for that to sharp breakdown. All right, so let's first of all look at the possibility first, okay, the way which I'm anticipating another leg higher, and then the way my projection is showing there, you can see, right, all right, so my projection is showing that kind of formation, okay, another leg higher. So another leg higher, very much similar like that, and this is the wave you are watching, okay. This move projection is showing, okay. So if this move doesn't stop, if price does not form this one more leg higher, okay, then let this to break down and let this to break down, okay, which I'm not anticipating. I'm not anticipating breakdown, okay. Let this to break down and price to pull back. So if I'm gonna make it more simple, okay, then you are simply watching the euro dollar chart. Okay, this is what you are watching. So all right, so this kind of correction you are watching, if it breaks down, this kind of correction, right, if it breaks down, so if it breaks down, then you are watching this kind of correction after breakout, all right, after breakout. Right now I'm not anticipating breakout. I'm anticipating it to just go back up and test that previous top, this area, so 68.80, and then give you, this is the move you are watching for the next week during the Fed rate decision, okay. That's the move you want on New Zealand dollar, okay. This is the move you're watching, right? That's the move you are watching. This is the wave you are looking for on the New Zealand dollar, all right. And it has a potential to go all the way back to this previous low, as said, all right, this previous low, and longer term to the downside. So similar setup going to be over there on the Australian dollar, US dollar. So last week we were expecting it to fall sharply, okay. So the date which comes over there somewhere within these areas, let's just find that date, 17th, all right, there. So this is where we can see, okay, so drop, so up to this level. So this has also got a good potential to run. So Australian dollar, US dollar. So if I'm gonna look at the lower time frame, last week we were expecting this channel to break down sharply to the downside. Okay, we got a breakout and we are having, you know, a correction over there, or flat formation, which we were expecting after breakout on the Australian dollar, US dollar. So the flat formation is very much similar like the New Zealand dollar, US dollar chart. Okay, and I don't think so I need to repeat that again the way I have explained New Zealand dollar, US dollar. Okay, so the wave you are looking is this. This is going to be the medium short-term target, going to be that previous low. Okay, after having flat formation completion. So medium-term target going to be this low, and longer-term target going to be 17th of Feb 2020. Okay, so if I'm going to look at the lower time frame, so similarly, the way I have explained the New Zealand dollar, US dollar, I'm anticipating another leg to happen. Okay, this leg to happen and price to hold that previous top, previous top, and then keep dragging lower aggressively to the downside. If this wave is not going to happen, all right, this one more C wave, we can say that if I'm going to pull out, you know, ABC, A, B, and C, if this C wave is not going to happen, okay, so we may see still that C wave, all right, so after breaking out for more downside, okay, like that, still can come over there, that C wave. So if it breaks down, do not chase that, let this C wave to come and let the price form a running flat formation like this for more downside. All right, so that's what you are waiting for, the C wave to appear over there within that flat formation, or after breaking down that previous bottom 70 to 60 and continue to keep dragging more downside. Hope that makes sense, guys. All right, so the wave you are trying to catch is already showing over there. All right, this is the wave. So the sharp aggressive fall to the downside back to the previous weekly or daily bottom at these areas. So good luck, and we'll see how it does. So the Aussie yen, all right, so Aussie yen still there where we left it last week. It slightly went back to the previous top, as you know I was talking about in the previous weekly market outlook. The target you are looking on this chart gonna be somewhere there. Okay, this candle. All right, so you are expecting it to drop all the way back to that previous low. All right, so if I'm gonna, you know, look at the Nikkei index, so the move you are looking for is very much similar like that. All right, so if I'm gonna pull out that and gonna paste that chart there, then this is what you are expecting. All right, so Nikkei index is already testing this previous low. All right, this date. So you are expecting price to visit that date too. All right, so this previous low, so 19th of November there. All right, so if I'm gonna look at the lower time frame and gonna look at the 4-hour time frame, the short-term trade for the next week you are watching very closely gonna be this trade for short-term. Okay, so we may see another leg higher before going to continue to keep dragging more lower, and then a quick fall you are looking for all the way back to that previous low 76 areas. All right, so if I'm gonna look at the 1-hour time frame, all right, so what you are expecting this correction to break down. Okay, and after breaking that correction you are watching for another correction to form over there 1-hour time frame. Okay, and a quick fall over there like that. All right, so if you don't want to get into this there, okay, then let the price form this a 1-hour time frame correction and a quick drop. Okay, so we may see another leg higher from this previous low, a retest of that top. Okay, and then we may see a quick drop, aggressive sell-off over there from that previous top. So this is what you are watching. We have seen sharp sell-off on the Aussie yen last week, but unfortunately that didn't continue for more downside the way we were expecting on the Australian dollar, US dollar. All right, so Australian dollar, US dollar went lower, but Aussie yen still held the top because of the yen weaknesses. All right, so Euro Chief, okay, then we're gonna look at the other pairs. So Euro Chief is also a longer term good chart to watch. So last week we were expecting it to bounce up from $1. It bounced off and gone back up. All right. So price is, trying to hold this previous low for longer term. So we got a bounce off from this $1 mark. All right. And price just went higher. So there is possibility that Euro Chief gonna retest that previous low $1 mark, all right, and gonna continue to keep pushing more higher. But I will suggest you to let the price visit the previous low again, and then you are looking it to buy again for a longer term, and price to hold that $1 mark. If you remember the previous weekly market outlook, yeah, we have gone through with so much detail on this chart by looking at the example on the Australian dollar and CAD chart. Yeah, that chart reversed from $1 nicely and never tested that $1 chart of almost more than a year now. All right. So similarly, you're expecting Euro to hold that $1 mark for longer term, and Euro Chief to continue to keep pushing more higher. So use a tight stop loss over there. If that works, price has already moved over there from that $1 mark. All right. So in case if it comes, so that's what you are looking. Okay. So price to hold that $1 mark, and you can use tight stop loss somewhere there once price gonna hit that $1 mark. All right. And if it stop you out, all right, try again. All right, and if it reverse, then you can hold that trade for longer term. So what you should do, there is possibility, as said, that price not gonna test that low again, as it has done previously as well. All right, because this is a good buy opportunity for big players, so they not gonna let the price stay over there for a longer term. So if I'm gonna pull out the previous old chart and gonna look at that, previous price, let's just go there quickly. It is not going over there on 1 hour time frame, so I think I have to go to the bigger time frame to find those places. So there we can see price never remained over there for longer term, and it just bounced off in couple of days. We can see over there. Okay, so similarly it has done this time, second time. All right, there it never remained over there. So this is what you are looking. If it is going to test for another time, okay, so you are looking this to hold that previous, okay, another time. So price just remained over there 2 days at one day and 2 day, all right, and then next 4 days, and then reversed for longer term over there from that previous low. So similarly, all right, price just remained over there for a day and then bounced off very, very aggressively. Okay, 1 day remained over there, then spinning bottom or dodgy, whatever you want to call that, then extremely reversed over there. So hope that it to go for another time, okay, and test that, and then you are looking it to continue to go higher for longer term for upside. Okay, so if I'm gonna look at the lower time frame, then you are looking price to, all right, just keep rising from this, okay, this trend to continue to keep pushing more higher, or another leg lower. This is what I'm saying. Okay, another test, another low, another test, and then hold that one, and then continue to keep pushing more higher. Okay, so continuation or test the previous bottom. Hope that makes sense. All right, so Euro Yen is not a best chart right now. Okay, so Euro Yen is just made the move, the bigger move, the move which we were talking about. All right. And last week we were expecting it to pull back up to 50% of this previous bearish wave. Okay, this previous bearish wave, 50% tracement up to this area. Okay, we got that 50% tracement. For the next week, you are looking it to break out and continue to keep dragging lower, specifically during the Fed rate decision. Okay, so we are having another leg possibility for short term, one more leg. All right, so like this. Like that leg can appear over there before price gonna start falling very, very aggressively. Okay, so this one more leg can appear over there. All right, back to that previous top. So if it comes, then you are looking it to break out and continue to keep dragging more lower. Okay, so better to wait for the price to test that previous top. So if I'm gonna pull out my moving averages on 4 hour time frame, if I'm gonna make it more simple, that's the price you are watching on the Euro Yen to hold. Okay, and price to continue to keep dragging more lower and break down this previous low and continue to keep dragging lower for more downside. All right, so euro yen, euro dollar, we have already seen. Kiwi CAD. Kiwi CAD is also setting up for a daily draw for another leg, bearish leg, all the way back to this previous low, or possibly new low is coming over there. This time price can break down that previous low. So if I'm gonna look at the, this 4-hour time frame, this is what I was saying on the New Zealand dollar, US dollar, okay, and or Australian dollar. So we can see over there that the Kiwi CAD already broken down this previous low. All right, it broken down. Okay, so that can happen. So that can happen on those charts too. So what you are looking right now, okay, another pullback here on the New Zealand dollar and CAD, okay, another pullback, small move, okay, another pullback like that, all right, and then a quick sharp drop, all right, expanding triangle formation like this, or like running flat like that, or expanding triangle formation like that. Yeah, if it visit that previous top, great, you are getting it to short it again from the top and continue to keep dragging more lower for more downside. All right, or if I'm gonna make it more simple, all right, so price to stay below those moving averages. All right, these moving averages are coming. Once price gonna get back within these moving averages, you are looking price to hold those moving averages and the daily wave to continue to keep dragging more lower. So the trade is very much similar like the pound dollar chart, okay, or the euro dollar chart, if you remember that euro dollar chart, okay, the big drop we have seen. So this is also very much similar like those charts. Okay, so this trade is also similar like that. So you are looking this to break down this previous low this time, all right, and continue to keep dragging more downside. So if I'm gonna look at the previous date, all right, so 17th of Feb here. So the 17th of Feb comes there. Okay, so at least visit that previous low. Okay, so at least visit that previous low, or in best case scenario, go more downside. It has already tested that previous, low 17th of Feb. Okay, but there is possibility that we can still see another leg lower. So same analysis. First of all, go back up, expanding triangle. All right, like I have shown on the Kiwi CAD chart, expanding triangle. This top to hold. Okay, this top to hold, and this top, all right, this top to hold, or moving averages, all right. So the moving averages are just coming over there. 1 hour time frame moving averages are coming over there. That these moving averages are the way I'm showing flat formation over there. Okay, this is less likely. Okay, it is not going to continue to keep dragging more lower without a correction. So expanding triangle or this simple flat formation and continue to keep dragging more downside. So CAD yen also went higher as explained in the last weekly market outlook. There was a possibility that the CAD yen can test the top. All right, so the move you are looking is the bigger one all the way back to this previous low. All right, so for the next week, the wave you are looking for, there is possibility that the Kiwi CAD can slightly push more higher within these areas. Okay, so it can test that previous top, that previous daily top. All right, so that's a bit far away. You are watching the price to drop, and next week you are looking this wave to happen first. All right, the way my arrow is showing, and break down and continue to keep dragging more lower. So for longer term. So when Fed gonna trigger its hiking cycle, so we may see strength on yen for longer term. Okay, so we may see strength for longer term. Yen can start rising for longer term. All right, and market gonna start pricing in for the recession. All right, so dollar pairs are already priced in for that. Okay, but yen hasn't priced in for that. Equities are dropping, but right now yen is just pricing in for the higher yields. So because of that, it's just staying at the top. So large speculators, they are just building their long positions on the yen pairs. All right, and we may see a big drop, a longer term drop for more downside. Okay, so this is the wave you are looking. The way if I'm gonna look at the lower time frame, we may not see a quick drop, okay, a quick drop like that anytime soon on it. So it can stay at the top before going to drop, because like it has done there. So when you're gonna start, you know, looking to drop on it, make sure you keep that thing in mind. Okay, so price can stay there like this. Okay, stay there at the top before going to drop, because you know CAD has to gain against some yen, some Aussie and Kiwi pairs before we're gonna get drop on the CAD. So CAD gonna drop at the last. All right, so you are looking that move. So Kiwi yen is also gonna be a, you know, big move to the downside, like indices are doing, or Nikkei is doing right now. All right, so last week we were expecting it to drop too, so this is still in the channel. So the next week you are simply looking this move to happen back to this low, okay, and we may see another leg from there and continue to keep dragging all the way back to this previous low. So if I'm gonna look at this time frame, okay, so you are watching a 1 hour time frame correction over here at this area. Okay, once that 1 hour time frame correction finish over there, you are simply looking at breakout, sell the breakout opportunity over there. Okay, the way my arrow is showing, just simply sell the breakout opportunity and price to stay below this previous top. Okay, so pound yen is also going down, and longer term drop, we are expecting it to go all the way back to that 9 October lows too. Okay, so it's also dropped from the top, and as we were expecting last week, it to correct. All right, so you are looking at 4 hour time frame correction to just simply break down. Okay, so trade with care, specifically during the Bank of England rate decision. All right, so if pounds drop during the Bank of England rate decision, then you are looking this breakout. Okay, that arrow is clearly showing price to just stay, you know, below those moving averages. Okay, stay that red moving average, which is just coming over there, and price to hold that top and continue to keep dragging more lower. All right, so NOK to drop to. So last week we were expecting it to drop. This pair has to drop to all the way back to this previous low. All right, so simple analysis, price is struggling and holding those previous top. Reason because of the higher oil prices. So both currencies are holding the highs, CAD and NOK, because of the higher oil prices. So once oil gonna start falling very, very aggressively, we may see a big drop on these currencies too. All right, so you are looking this to hold too. All right, so SEK is already dropped for one more leg. You are looking that to drop too. So dollar yen went higher for another leg. All right, so next week you are looking this to drop for a big time, specifically after the Fed rate decision. Do not sell it before the Fed rate decision. Okay, and there is possibility that dollar yen can spike up for another leg higher before during the Fed rate decision, before going to continue to keep dragging more lower aggressively. Okay, so you are looking dollar to drop sharply after the Fed rate decision. Okay, if it comes, all right, then you are, if it drop like this, okay, this is what you are expecting after the Fed rate decision. Okay, once price gonna start falling that, then you are chasing it. Don't chase it before the Fed rate decision. There is possibility that it can spike up before going to drop like that. Okay, it can spike up because of the Fed, you know. All right, so last time in the last weekly market outlook, I have explained to you guys that when Fed trigger the hiking cycle, when Fed were, you have seen, if you look at the past data, then it dropped very, very aggressively when Fed was raising the interest rate. So this is the similar move you are looking over there on the dollar yen for longer term. All right, so a big move to the downside. So dollar yen and chief yen also same big move over time. There is a daily flag, and we may see that daily flag gonna break out. Okay, when Fed gonna trigger the QT. All right, so this daily correction to short-term trade, you are looking already within these areas. All right, so short-term trades are already there. Okay, these trades, so short-term trades, these trade back to these area or this previous low, and a quick sharp aggressive fall on the chief yen for longer term to the downside. All right, so SEK is already dropping already tagged that 9th of October lows and went even below that. So this is what you are expecting next week. Another 4-hour time frame correction to hold and break out and continue to keep dragging more lower. So price to hold that previous top, all right, this previous top, and keep breaking lower for more downside. Another small leg possible over there, okay, the way my arrow is showing. So that one more leg is possible. And once price gonna complete that, you are looking this to break down that previous low for more downside. Rand, okay, Rand is still strong against the yen, okay, but there's gonna be a big drop coming over there soon on it. Okay, so this one more leg lower. So Aussie Chief is also setting up for a daily breakout. Okay, we are expecting this move to happen. This test that low or go more downside. Okay, visit this previous low again. So let's look at the lower time frame. When you know market gonna open, you are looking for this daily correction, 1-hour time frame correction to break out. All right, so this 1-hour time frame correction to break out, price to test this low again, test that top and keep dragging more lower. All right, something like that flat formation to form over there on the Aussie Chief, and daily wave to happen. All right, this daily wave to happen. All right, so oil is a very uncertain market. All right, I really don't like to show you anything on it. Okay, so if you are trading on the oil, trade with care. This is very, very uncertain market. All right, and as I said, anything can happen. We still can see, as you know, that war is going on. Okay, and both parties are, you know, putting sanctions on each other and coming with the same spirit, and tit for tat scenario is there. So anything can happen with the oil. Okay, oil only gonna drop then when either the OPEC gonna break down, all right, or the war gonna calm down. Okay, then we may see a quick drop on oil. So this might be a top on oil for longer term. Okay, so strong sell came over there when we got some news that the UAE and Iraq said that they're gonna produce more oil. Okay, but right after that they said that they're gonna, you know, go according to the OPEC agreement, right? And then market started to recover again. So oil market is just waiting for some good news to come out. All right, more production, then we may see a quick drop over there. So it's a very, very uncertain market and highly risky asset right now. All right, and if you are trading, then trade with care on it. Okay, so I'm still anticipating another push up on it till market conditions are not good enough. Okay, and another leg higher can appear over there. So make sure you use proper risk reward ratio for that one more move up back to that top. Okay, and if it fall very, very aggressively, then don't hold that trade. Okay, so just get out from the market. So it's a very highly uncertain market. We still may see another leg higher, but as I said, okay, we're gonna have a longer term drop on oil because oil cannot sustain those prices, cannot sustain the higher prices. We can see over there it dropped very, very aggressively there, it dropped very, very aggressively there, it remained sideways there. Okay, but then finally went lower, so it cannot sustain those higher prices, as I said last week. So it's gonna drop very, very aggressively to the downside. So whatever you are doing, so trade with care. So if you understand, then okay. If you don't, then better to not trade on it. Trade on other assets. Okay, so same goes with the Brent. All right, and this might be a top on oil. Okay, but we can still see another leg higher over there on oil. Okay, another leg higher can appear over there if conditions get worse. So Bitcoin to drop and test the 30K, and same like the previous weekly market outlook, we haven't seen change on it. Test that previous low and then go back up. So if I'm gonna look at the 4-hour time frame, price is just still running within that triangle. Okay, we may see another leg higher and then break down up to 30, and it's simply setting up for a one more bullish leg. All right, so we are having a divergence, so momentum is shifting over there for upside. So buyers are trying to get into the control. Okay, divergence is just momentum is shifting away for another leg higher. So better to test that 30k at 28k and then go higher. So same goes with the Ethereum, okay, like Bitcoin. Same goes with the BNB, one more leg lower to happen and then go higher. Okay, so Nikkei index is just simply dragging more lower. So if I'm gonna look at the one more leg lower during the Fed rate decision, all right, so one more leg lower. So last week we were expecting it to find its floor over there at this area, okay, and go higher. It went lower and then, you know, went into a correction. So next week chart is very much clearly showing what you are expecting. All right, so price to just stay below the 4-hour moving averages, okay, and one more leg lower before going to continue to keep pushing more higher. So same goes with the S&P 500, okay, one more leg lower. So we may see more downside on the, I want to see more downside, to be honest, on the S&P 500, okay, and S&P 500 to test that previous low, like that kind of move. All right, and then start the bullish cycle, then start to rise. So, you know, there is possibility that we're not gonna get that move, and S&P 500 gonna start rising after the Fed rate decision. Okay, as I said, guys, so market is just waiting for the reaction of the Fed on balance sheet. Okay, how they're gonna do with the balance sheet. That's the most important part of the tightening cycle. All right, so if Fed is going to be, you know, really, you know, quick towards that for winding up their you know, balance sheet, then we may see more downside. Okay, it can continue to keep dragging more lower. Okay, if they are going to say that they're gonna take time, not gonna be in hurry, then we may see another leg higher. Okay, so higher interest rate not gonna dent on the S&P 500 from more downside. Okay, we may not see, you know, sharp sell off towards that low up to 35 or 33 areas. Okay, so it depends on the Fed balance sheet, how they're gonna talk about their balance sheet. All right, it's around 9 trillion. Fed balance sheet is around 9 trillion. So if they're gonna, you know, let's look at that again quickly. So it's a big question how they're gonna deal with this. All right, so just look at this last time when they were tightening. So they, all right, so there we can see, okay, so they dropped, the balance sheet dropped with 16%, okay, and then market hit the recession. Okay, we have seen a recession. All right, so this is the big question right now, how they're going to deal with current balance sheet. Okay, so that's the part last time, a tiny part over there. You can see over there a small move, small tightening from Fed, from balance sheet, almost $1 trillion. Okay, not $1 trillion. All right, so 700 billion, we can say that, right? So 700 billion. Okay, so they took out 700 billion, I mean, removed from their balance sheet, and market hit the recession. Okay, so this time it's bigger than that. Okay, so this is the big question, how they going to deal with this. It's sitting at the 9 trillion right now. At that time it was sitting at the 4.4 trillion. All right, and it went up to 3.7 trillion. Market hit the recession. This is the big question, rather than just raising the interest rate. So raising the interest rate is a simple, you know, strategy. Just come and raise the interest rate. So the question is how they're gonna deal this big, you know, elephant, we can say that. All right, this is which caused the higher inflation. This is which caused the inflation. All right, so inflation came because of this. All right, not because of the other things. Right now people are talking about that inflation is just spiking up because of the war. No, it's not because of the war. So it's because of the Fed. They printed a lot of money. Right, they printed a lot of money, and that's causing the inflation. So how are they going to deal with this to bring the inflation down? That's the question, not the hike. All right, so raising the interest rate is not the point. So this is the point, how they're going to deal with it. All right, so when they're gonna deal with it, risk on assets gonna stay under pressure. So they're not gonna, give you a buy the dip opportunity for more upside. We may see, more downside on the indices. So keep that thing in mind when you are buying. Okay, so last week we were expecting it to go for another leg lower on this 4-hour time frame at this area. Price went lower, almost tested that bottom, all right, and then spiked out for another leg higher. So same analysis like that. So watch it how it does after the Fed rate decision. As I said, if they're gonna say that they are going to tighten the balance sheet, we may not see another leg higher. Okay, then price can keep dragging more lower, another leg higher, and gonna continue to keep dragging slowly more downside back to 33 area. Otherwise, if they're not gonna talk about the balance sheet and gonna take their time, right, then you are looking this to test this previous low or new low and then bounce off after the Fed rate decision and continue to keep pushing more higher. Okay, then you are watching these areas very closely. Hope that makes sense. Okay, then watching either way, you are watching price to hold these areas after the Fed rate decision. Okay, let's just make it more simple and easy rather than being double-minded over there. Okay, so if S&P 500 does not fall sharply below this 4100 after the Fed rate decision, then you are looking to test that previous top. Okay, if it falls sharply during the Fed rate decision, means that they are going to be very hawkish. All right, they are going after the inflation very aggressively. Okay, that can cause S&P 500 to keep dragging more lower, like European indices are doing right now, or our Nikkei index is doing right now. All right, like this in Nikkei index is doing right now. So keep that thing in mind. So same goes with the Nasdaq 100 index. Okay, so Nasdaq 100 index also it is about to visit that previous area 20 October lows. Okay, we are about to see just a couple of points of 12,000. All right, so 800 almost 1,000 point away. So this move to happen and then continue after the Fed rate decision. So similar analysis, if I'm gonna look at the lower time frame, one more leg. Last week we were expecting it to drag for one more leg lower within these areas. It happened. Next week when market gonna open, you are still looking it to drag more lower. Okay, so new low like that, new low like these areas, new low form, and then after the Fed rate decision, okay, then bounce off. If Fed does not deal with the balance sheet, then bounce off. If they're gonna talk about the balance sheet, okay, then more downside, go up to 12 or below that 12K, and then find its bottom over there. So risk on assets are highly uncertain right now, okay, because they are being hit by the Ukraine war and also from the Fed uncertainty. All right, so hope that makes sense. So keep that thing in mind. So now let's move on to the dollar chief. Dollar chief is also bullish as said, okay, and looking for this to continue to keep pushing more higher. So it's way behind that previous top, this October or February or pre-pandemic price, February. All right, so way behind that. So it has to travel that way over time. So it has to travel that way. So what you are looking, all right, so specifically during the Fed rate decision, if Fed is going to be strong, hawkish, all right, then this to just continue. It is not at a best spot right now, all right? So make sure when you are looking to buy it, trade with precautions, okay? So it's a sideways market right now. It still can fall. So you are looking another correction over there, similar like that, okay? And then continue. Your moving averages to hold this correction and continue to keep pushing more higher. All right? If not, okay, if it doesn't continue after the Fed rate decision, then fall for an, Fed hiking cycle gonna be really quick this time, okay? They're gonna raise interest rate on this meeting and on the next meeting, almost every single meeting, they're gonna raise the interest rate, all right? So continuation for more upside, all right, on dollar against the chief. So money to shift away from the chief to other safe havens. So cat chief is not a best chart right now, all right? So we may see, that top is far away, okay? So you are watching this top next week. So not a best chart to be honest. Okay, so you're watching this top to hold. If it hold, then drop one more leg lower. EuroCAD, very much similar like that. If you remember last week, we were talking about the oil, and on EuroCAD, okay, it bounced off last week from the previous low and went higher very, very aggressively. So you are watching it to bounce off again next week very, very aggressively from these previous lows, okay, and then continue to keep pushing more higher. So use, reasonable risk, use proper risk reward ratio on this chart, all right? Because when you are wherever you are buying euro, Europe is in a war with the Russia, right? So wherever you are buying euro, so buy it with care, with proper risk reward ratio. Yeah, if war spread in the Europe, let's say yesterday or today, all right. So today news broke out that Russian strike on Ukrainian city which is close to Lviv and just next to Poland border, just 19 miles away from Poland border, all right. So what's the Article 5 of NATO? Article 5 said that if any NATO country is being threatened or are going to be attacked by someone, all right, then Article 5 gonna trigger, all right, then the whole NATO gonna defend that territory. Okay, so it was today's strike was just 19 miles away, very close to the NATO territory. Okay, so it's right now. It's just trying, the news which are just coming over there from that region, they are just saying that this slowly that the war is spreading beyond the Ukraine. All right, West is pouring weapons into the Ukraine. All right, and today Russian striked those areas which are hosting the West weapons. Okay, means that direct clash chances are very much high in coming days. All right, so that the war can spread over there from Ukraine to other neighboring countries. So wherever you are buying euro, just keep that thing in mind. If things are not going to calm down, then buying euro is very, very risky right now. Okay, buying euro and pound, these two currencies are highly risky. So if we are going to see any kind of truce, or there are also good news coming over there. All right, that those are saying, news are saying that we may have some kind of, positive negotiations outcome within the next couple of days. If that happens, okay, then euro gonna spike very, very aggressively for upside. Euro and pound both gonna spike very, very aggressively for upside because they are undervalued right now. Okay, so they are very, very sensitive to the war right now. So wherever you are buying euro, just make sure you are buying with proper risk reward ratio. Do not just get into the market without understanding. They are highly risky. Okay, so pound chief to continue to keep dragging more downside, okay, up to this previous low. It is in a correction. Okay, so the correction which we were expecting last week. All right, so my structure is still same. I haven't changed it since last week. All right, so it's going into a correction. You are expecting this 4-hour time frame correction. It is not a big trade. Okay, pound chief has already made its big move from that top. So the move you are looking from the pound chief is not a big, so it has already done that. So you are simply looking one more leg lower. Okay, this one more leg lower like that. So if it keep dropping all the way, then good luck. All right, otherwise be prepared for stop loss of that trade. All right, so you are selling at the floor. So 4-hour time frame correction, 4-hour moving averages to hold, and price to continue to keep pushing more lower. Euro pound also bounced off from the floor. Last week we were expecting it to bounce off. Okay, it didn't continue. So we still may see, a more downside on this euro pound pair. Okay, do not chase that buy at the current price. It is not at a best spot where you can chase. All right, as said, Europe is still underwater. So we may see another leg lower, okay, back to this previous low. And then you are looking for this move. Right, so pound Australian dollar. So you are looking pound to bounce off during the Bank of England rate decision. Okay, pound to bounce off during the Bank of England rate decision, and pound to visit all the way back to that previous top. All right, so it's holding that previous low, and during the the Bank of England rate decision. Okay, so you are looking this to hold this previous low and continue to keep rising. So if I'm gonna look at the 1 hour time frame and these corrections, you are watching these corrections very, very closely. Okay, so it may rise. We may get a good news from negotiations between the Russians and Ukrainian. Okay, if that comes, then you are looking this breakout and continue to keep spiking for more upside. Same goes with the pound New Zealand dollar. Okay, rise for another leg higher all the way back to that previous top. Okay, so if I'm gonna look at this, all right, so similar like the pound New Zealand, pound Australian dollar. So these 1 hour time frame corrections to just pop up very, very aggressively, break out very, very aggressively, and continue to keep rising for more upside. All right, so let me pull out my moving averages. So you are watching these for 15-minute moving averages to hold and pound to spike up. Oh, as I said, guys, explain to you, when you are buying these currencies, you are buying pound, you are buying euro, you understand this scenario, what's happening. Okay, they are right now, they got the potential, pound got the potential, euro got the potential, but risk is extremely, high over there buying these currencies. Okay, so use proper risk reward ratio when you are buying these currencies. Do not buy them without stop loss. They can drag more lower. And the risk is very much high over there for going more downside. Okay, so this is what you are looking for longer term. All right, so pound CAD also gonna be a buy opportunity. Okay, go back up for another leg higher. And if I'm gonna look at the lower time frame, it broke out for another leg lower. So you are watching it to bounce off very, very aggressively during the Bank of England rate decision and continue to keep rising for another leg higher. All right, so slightly a different structure from the pound New Zealand dollar and pound Australian dollar. Okay, so looking this to bounce off to go back up. Last week we have seen a strong rebound on this chart. Okay, and last week we were expecting it to go back up, and same goes with the next week. All right, so same for the next week. So explain to you guys, make sure you understand that they carry high risk right now because of the fundamental reasons. All right, so you are looking for this to break out very, very aggressively. All right, break out and continue to keep rising for more upside. If it does not break out for upside, then go down, test this previous low, and then again start rising aggressively for upside. All right, so same goes with this chart with the euro New Zealand dollar. So go back up within that channel for longer term. So if I'm gonna look at the lower time frame, same analysis. All right, so bounce off and break out sharply like these corrections has done. All right, break out and continue to keep rising. All right, or visit this previous low and then again bounce off very, very aggressively for more upside and continue to keep rising all the way back to that 70 to 75 areas. All right. So Kiwi Chief is also similar and opposite to that. Break down and continue to keep dragging more lower. So you're watching this 1 hour time frame correction, which is just building over there, or expanding triangle to break out. Okay, this short-term trade back to this previous low and then go back up, test that top, and then keep dragging more lower all the way back to this previous 1 hour time frame low. All right, so Australian dollar and New Zealand dollar, you are looking for this to break down too. All right, so this move, that wave to happen all the way. So we are having a correction over there, which is just setting up over there. So we may see a drop on the Australian dollar before then the New Zealand dollar. So you are looking both currencies to go down, okay, and that wave to happen for a time frame correction to break out and continue. So dollar peso to bounce off and continue for that wave. Okay, so we have seen some weaknesses on the dollar against the peso, while dollar is gaining because of the higher interest rate. Okay, so drag lower and then bounce off. Okay, so finally we got some, move on the dollar against the Chinese yuan from the floor. This is what it is doing, setting up for a strong breakout for longer term. And Fed hiking cycle is about to begin in the next week. All right, so QE has already ended last week, and it is just rising sharply from the floor. So you are still looking it to visit these previous lows, okay, and buying from the lows rather than chasing at the current price. Okay, do not chase it at the current price. If correction appears during the Fed rate decision and breakout, then you can chase. Otherwise, let this price to visit this previous low or new low, and then you are looking for this to rise very, very aggressively from the previous lows. Okay, those are the currencies. And natural gas, this is the US one. All right, so I wouldn't suggest you to do anything on this. Okay, this is not a best chart right now. Wouldn't suggest you to do anything. All right, so there you can see the problem is there on this chart. Okay, it hit the high at the 200 and let's just look at this. Okay, it hit the high at 225. There where we are having problem. All right, so current contract in front. So natural gas, Dutch TTF. Okay, where is the problem? So as said, if conditions are going to get worse between the Russia and Europe, so European natural gas is going to spike very, very aggressively for upside. Okay, there where we're gonna see more upside, and if things going to calm down, okay, then it will crash back to these areas. So these are the highly risky assets. All right, so you shouldn't chase after these assets. Okay, they carry a lot of risk. Yeah. So dollar rand. All right, so dollar rand also bullish. Okay, dollar rand is also bullish. So if I'm gonna make it bit correct, my structure, okay, the channel which is just building over there, okay, this channel to hold that previous bottom. Let me pull out my moving averages. Moving averages are not perfectly being held over there on daily time frame, okay, but moving averages are being held on a bigger time frame. Okay, this is the move you are looking. So if I'm gonna look at this is where you are paying attention. Okay, price to hold these areas. All right, and during the Bank of England, Fed rate decision, this next leg to come out, okay, and possible more upside all the way back to that previous top, 19. So European stock is still struggling. Okay, we may see more downside on it. There is no, reason for these to perform really well. Okay, so Euro stock 50 to break down for another leg. So if you remember last week, we were expecting correction to appear over there. Okay, we are having that correction. So the next week you are looking this correction to break out and price to break below this next leg, specifically during the Fed rate decision. Okay, so price to hold these moving averages and break out and continue to keep dragging more lower. Okay, so we're gonna look at the Nifty. Just bear with me. It will come later on down there when I'm gonna look at the small caps. Okay, so US 30 very much similar like the other US indices. Okay, the way I have explained. So we may see drop balance sheet. Okay, so the big question which lies over there is the balance sheet. How they're gonna deal with that? If that's coming in front burner, then we may see more downside. If not, then price gonna start rising for another leg back to that top. Okay, so what you are looking for the next week on lower time frame, just simply another leg lower, previous bottom or new low. All right, so new low specifically during the Fed rate decision. Okay, breakout, another leg lower. So if you are selling US indices at such levels, okay, they are very, very risky. I would suggest you to not trade on these indices. Okay, US indices to short at these areas. Okay, because anything can happen. We are having very uncertain time right now. All right, very high, very uncertainties are at extreme levels. So there are risk for the nuclear war. Miscalculation can happen, right? And things can also change, all right? Things can also change. This war can end it with some negotiations as well. So that's going to be a good story for the indices. So US indices is going to bounce back if good news is going to come. All right. So if bad news is going to come, then the indices which going to lose more is the European. All right. EU indices is going to lose more rather than the US indices. So US indices are falling, but falling very, very slow as with compared to the EU indices. All right. So if you are selling, US indices at current price, it's risky. All right. It's risky. They can bounce off. So what you are looking another leg lower and then this one more leg higher. Okay. This is the move you are looking. These move like I have said last week after having that one more leg lower there. All right. So you are looking for short-term buying. Okay. Within these areas or new lows. Okay, and looking for these small move first. And in case if the sharp breakout is going to come, like I said, good news is going to come, then break out and continue to keep rising all the way back to the previous top. That's how you are planning to trade on them. Then continue to keep pushing more higher. So do not trade on these. Okay, these moves carry risk. They have made their move. So if you're gonna trade on them from current price for sell, there is a risk. Crash can happen in one, even there is no reason for crash right now. Okay, because war has happened. You can't expect extreme scenario than that. War has happened already. All right, you only can expect this to escalate extremely sharply escalate. All right, if that happens, then you can expect crash. So crash chances are very less likely right now. So more likely we're going to see stability on the US indices. So same goes with the DAX 30. Okay, so DAX 30 to stay trending for more downside. All right, expecting it to keep the trend intact. So last week we were expecting pullback to 4-hour time frame. Even I haven't changed my structure. All right, price slightly went lower before going to pull back for another leg higher. All right, so the next week you are simply looking the bearish trend to stay intact, okay, or moving averages to hold and the price to continue to keep dragging more downside. All right, so if I'm gonna make it more simple, then breakout. So price to European indices to stay under pressure. All right, there you can expect, even can trade for one more leg lower. All right, so this is where you are paying attention. Price to hold that and breakdown. DAX to breakdown for another leg lower. Test that low or new low. All right, form another leg lower. So trade with care on them. Okay, it can visit this previous low at 1160 before going to continue to keep pushing more higher. All right, so trade with care. This is the leg you are looking for. So continuation for more downside, and same goes with the stock 600, another leg lower breakout. Okay, hold these previous tops and break out and break this previous low and continue to keep pushing more lower. Okay, and then we may see some buying once that correction gonna be over. So ignore UK 100 index. All right, but staying, short-term bearish on it. Short-term bearish there at this area on lower time frame. Short-term bearish. All right, so not a best chart right now, I will suggest. Okay, one more drop. Like others. Okay, so stay below the moving averages, 4-hour time frame. Stay below the 4-hour moving averages. All right, and drag back to that previous low. Okay, so franc 40 is also similar. So stay below the 4-hour moving averages for next week. Okay, and break out for the next leg lower. Okay, breakout, test this previous low or new low. All right, so Gold. So gold went higher for another leg and tested the previous top. So we were expecting this possibility as well last week. Okay, so next week we are having a fat rate DCM. So gold went higher because of the, US and Ukraine war. Otherwise, there wasn't any reason for the gold to rise. Inflation already spiked, topped at 7.90. All right, and QE ended. Hiking cycle is going to come. There wasn't a solid reason for the gold to rise. Okay, so it's going to depend on the Fed, how Fed is going to tackle with the, again, balance sheet, guys. So high interest rate hike is already priced in. So what I'm anticipating this lag to happen. Okay, this lag to happen, and there is no reason for the gold to break out for this top and continue to keep pushing more higher. All right, but again, we are having war. Anything can happen. Okay, market is very, very uncertain. If we are not going to have a certainty, then gold can break out this previous top and can continue to keep pushing more higher. Okay, so remember, this can happen when you are going to short the gold. Okay, so make sure you use proper risk reward ratio, and then you trade on the gold for short side. Okay, so when there, watch it to correct there during the fat rate decision. Okay, if ahead of the fat rate decision there is going to be a correction, and Fed is going to hit with the market with strong hawkish tone. Okay, then break out aggressively and continue to keep dragging more lower. All right, so it's risky to short the gold right now. Looking at the fundamentals, okay, fundamentals are very, very, strong, bullish for the gold. Okay, so keep that thing in mind and trade with care. Same goes with the silver. So silver to draw for another leg during the fat rate decision. Okay, not a best chart right now, so I'm gonna ignore it. Okay, so copper also drop for longer term. All right, also drop for longer term to the downside. Not a best chart right now. Right, dollar chief, I have already shown the dollar chief. So euro Oz already have shown. So people might be expecting euro Oz and euro to rise when we were having war. So they didn't expect that the impact can be very, very, dangerous for euro and pound for after the war. So yeah, so we are, I'm expecting some stability on the euro and pound. Okay, they cannot keep falling without without break, because we're gonna have some rebound on them. All right, so US indices, small caps, same goes with the large caps. Okay, we may visit. So the analysis which I have made, okay, this can happen, all right, before going to rise on the US indices. So same analysis apply on this chart. Okay, so the places you are watching on this is this previous low, right? This previous low as set, and price to hold after the fat rate is seen and continue. So same goes with the small caps 2000, they are still bearish. All right, so we may see another leg lower. Small caps are really struggling right now. All right, so break down and continue for another leg lower on this daily time frame. All right, so hold these previous tops and break down and continue for next leg lower. Someone was asking for the Nifty. Okay, so Nifty is also following the US indices. Okay, there is, both charts are similar. So the way I have explained the US indices, so you shouldn't be surprised by that. Okay, so just look at them. Look at these two charts. So they are following each other. There is no, okay, so we got a strong aggressive move, then a weekly correction. Strong aggressive move, a weekly correction is just happening over there. So structure is very much similar on Nifty on lower time frame like we are having on the S&P 500. Okay, so the way I have explained the S&P 500, so similarly the Nifty gonna behave. Okay, so 4-hour time frame correction, another leg lower can happen. All right, like this, another leg lower, breakdown or new low, test this low or new low. Okay, and then similarly, the way I have explained the US indices. Okay, so if you are looking to buy, then this is the place you are watching. Okay, when US indices is gonna spike up for another leg higher, this is gonna rise too. All right, so these are the indices. So we're gonna look at the crypto market is very slow these days. Okay, so crypto market is just dead. Okay, no one is talking about the crypto market these days because it is really slow, not spiking up. So breakdown and one more leg lower. So it is there where we were last week. So Solana is there. Okay, so more downside. I even don't see any potential opportunity on the crypto right now. Okay, same like last week. More downside on the ADA. All right, same like last week. And Terra went higher, tested that previous top. Okay, so Terra to fall back for another leg lower. Okay, and then continue maybe for another leg. Okay, but hold that previous top and drop. Sand breakdown, GTC, GTC to stay at current price. Okay, KuCoin drop for one more leg lower, back to this previous low. Dogecoin go more downside. Where are those who are saying that this is gonna go to the moon? So it has already gone to the moon when Fed was trying to create the inflation. Where are those players now? Where are those? Where is Elon Musk right now? He's not buying it. All right, so because central bank, they don't want inflation right now, they want deflation. Okay, right now, so their priority is to bring the inflation down. Okay, and then that's the reason people are just selling them, and they are going down. All right, so these coins are struggling, so go more downside. All these coins go more downside. Okay, so test the previous bottom, continue to keep dragging lower. This to drag more lower to break this previous bottom and drag more lower. Phantom, Oita continue to keep dragging more lower. So I haven't changed my structure, so they are still struggling since last week. Okay, we haven't seen any change on them, so more downside. Litecoin more downside. All right, so Ripple more downside, and Shiba more downside. All right, so that's it. Let's just finish here, and we'll see how Fed is going to do next week. Okay, so Facebook it hasn't done yet. Okay, so all these big names, they haven't done their bearish cycle yet. All right, so I have no idea. I haven't seen that chart yet. Sorry, Adam. Okay, so these big names are still struggling. So Facebook still under pressure, okay, and can drag more lower. So it's gonna depend on it's gonna depend on the balance sheet, guys. How the Fed balance sheet is going to unfold. How they are going to deal with the balance sheet. All right. So yeah, longer term there are going to be a buy opportunity on the Facebook, but Facebook hasn't done its bearish drop yet. Okay, so Tesla needs to go more downside. Tesla needs to drop. Tesla hasn't dropped yet. Okay, so it has to drop more. So continue to keep dragging more lower Tesla, at least up to these areas. All right, so there was a Netflix chart. There should be a Netflix chart too. So Netflix is also dropping very aggressively. All right, so Netflix also hasn't finished the bearish cycle yet. Okay, so more downside. So all these charts are going back to the pre-pandemic prices, if you remember. All right, so all these charts are going there. So that's the reason some currencies are also heading towards there. So they haven't done their bearish cycle yet. Okay, so thank you very much. enough for this week. We'll see you back again in another week. Until then,